Last week, I showed you how to execute the daily SPX weekly iron condor strategy on the THINKORSWIM mobile app. And I received a comment question from my homie, Chris Clay. And that made me realize that I failed to completely answer some obvious questions about executing this strategy. Hey, this is Rochelle, and welcome to Multiple Passive Streams of Income. Please look at the timestamp info on the screen and in the description below for the part of the video that best interests you. So I'm going to start out with Chris's question and also add some other details that may be helpful, followed by this week's results. So Chris's question asked about trading more than one contract and the amount of money that he would need to have in his account to make trades of more than one contract. So on THINKORSWIM, when you're entering the information about each leg of the iron condor, that's when you're going to enter the number of contracts you want to trade. On the screen, I have a screenshot of a leg setup, and this is where in the quantity field, you would enter the amount of contracts you want to trade. So remember, the quantity of contracts will show as a negative number if you're selling to open, and the quantity of contracts will show as a positive number if you're buying to open. So to compute the amount of money needed for your trade, you need to compute the maximum loss of the trade. If you're trading iron condors with even spreads, like the ones that I've been demonstrating for the daily SPX weeklies, the maximum loss is the point spread. And in this case, we've been using 10 points for our call spread and our put spread. We would times that by 100 and then times it by the number of contracts that we're trading. So I've been using a 10-point spread. A contract is equal to 100, and I'm only trading one contract of it. So it's 10 times 100 times 1, which is $1,000. So that's what I'm going to need for the trades that I'm making and that I'm showing you in these videos. Let's just say at some point I increase my contracts to 2, then I'd have to have $2,000 in my account. If I increased it to 5 contracts, I would have to have $5,000 in my account, so forth and so on. Now, if I wanted to trade an iron condor, for instance, let's just do an example. Let's say it's 2 contracts, but I have a spread of 20 points on both the call and the put side. The formula would be 20, that's for the spread, times 100 times 2 contracts. So I would have to have $4,000 in my account if I wanted to make this trade. Now, if a trade has unequal spreads, and I believe you have to just calculate the maximum loss of the leg with the greatest spread. I've never traded an iron condor with unequal spread, so I'm not absolutely sure. But it seems that this is the calculation that the software makes when it determines how much you have to have in your account to make unequal spread trades. So some other information that may not be clear about this strategy is the reason why I'm attracted to this strategy, and it's mainly because it's a daily trade. I don't want to be in trades overnight or for days and weeks. So the fact that the SPX has weeklies that expire on Mondays, Wednesdays, and Fridays, that's very appealing to me. Another attraction is that the SPX is a cash settled index versus doing an iron condor on a stock. So let's just say if my iron condor doesn't expire worthless, I stand a chance of being assigned shares of stock. So that's why I like the SPX, because it's cash settled. Also, I don't want to predict price movement, and I don't want to draw lines on charts and read indicators, at least not at this point in my growth. So this strategy tries to take advantage of the high probabilities of this trade winning, and also that there isn't really any market direction, right? We just wanted to trade in a specific range, and if that happens, we gain money when the contracts expire worthless. Okay, so now let's look at this week's outcome. And Monday we had a gain of $105.22. And I'm saying all of the gains and losses with all of the fees calculated inside the amounts that I'm saying. But even though we had that gain on Monday, we had a loss on Wednesday. Yikes. And it turned out to be $879.86, which sucks. Now, of course, I hope the loss wouldn't have happened so quickly, but it did. And that's the reality of trading. Now, remember, we had 5 wins prior to that loss. Those wins totaled $656.06. So the actual loss turns out to be $223.80. On Friday, we had another gain of $155.13. which now puts me at a deficit of $68.67 so far. Now, of course, we don't ever want to be at a deficit, but this loss came earlier than what backtesting results revealed, and we know past results do not guarantee future results. So let's hope the strategy emulates the longer win streaks of the past backtest results, and that we experience that longer win streak before another loss occurs this time around. If you want to continue to track my results, please subscribe and hit the notification bell after you subscribe so you're notified when I drop new videos. And also like or dislike, all interaction counts. As always, thanks for your time, as I know you could be any other place right now. Take care.